Today's Talk About It Tuesday question is, the president has made several announcements that have disrupted the markets only to see a rebound in a few days when he backs off. As investors, how can we take advantage of the market dips and rebounds to make more money? Okay, let's unpack this whole thing. So let's just talk about the announcements, and then we'll talk about us as investors, and then we'll talk about timing. So it is quite possible that the announcements are very deliberate and known to cause an emotional response in the markets that will cause a steep decline, only to then go back on the original announcement, knowing that it will rebound the market. And it is possible that there are insiders who are close to the president who are benefiting from knowledge of when the announcement will be made and when the announcement will change and cause the rebound. Only somebody with insider information can really take advantage of it, because you'd have to time it so perfectly in order not to lose, which means you'd have to know that the announcement is coming, be ready, have your money ready. As soon as the announcement is made and the market dips, buy as much as possible, knowing when it's going to rebound, buy as much as possible when it drops, and then know when it's going to rebound and when to sell, right? And that's not investing, by the way, that's trading. And so let's just talk about that part. Let's just go back. Without the insider information, it is impossible for you to time when an announcement will be made and when another announcement will happen that will overcome the first one and cause the rebound. So to try to time these announcements, or even to try to time market dips and rebounds, experts without insider information can't do that. And so if your timing is wrong, you're buying at the wrong time, selling at the wrong time, you're going to get stuck. You're going to make a horrible decision, an emotional decision, a decision based on headlines, based on political announcements. It's a horrible strategy for investing. Now, if you're a trader and you like to gamble, that's a whole nother ballgame. But let's talk about being an investor. So when we're talking about being an investor, we're talking about not short-term gains, not short-term losses, but long-term gains. So we have a time, what we call a time horizon, that's 10 years out, 20 years out. We're thinking long-term. So when you consider the long-term, any dip that occurs for a couple of days or any jump that occurs for a couple of days is negligible in the long term. So we don't have to bother chasing it. It doesn't make sense for us to chase it, because a little blip up, a little blip down is meaningless in a 10, 20-year time horizon. So you're better off being consistent and using what we call dollar cost averaging. So if you're consistent, you invest a certain amount of, especially if you're doing an index, you invest a certain amount every time consistently over 10 years, over 20 years. You're gonna hit some highs, you're gonna hit some lows, but it will average out pretty steady, and the dips and the jumps won't really matter to you because you'll have a nice steady return. Also, if you're talking about individual stocks, it's not about the announcements that you hear. It's about the fundamentals of a company, right? So the fundamentals of a company don't change because the president made an announcement that he's going to invade some country, or he's going to put a tariff over here. The fundamentals of a company are the fundamentals of a company, and that's what you're investing in if you're doing individual stocks. And if you're doing, like I said, an index, then an index doesn't really matter in the long term. It's going to do what it does. It performs the way it does. So the S&P 500 is the S&P 500, regardless of whether or not there's an announcement that makes it jump up or jump down in a couple of days. So my best advice is, don't be an emotional investor. Don't be a headline investor. Don't try to chase the highs and lows if you're an investor, because investors think the long term, and the long term, like I said, those announcements, you won't even feel it by next year, you won't feel whatever little blip or jump that it made. It's negligible in the long term. So my advice is don't bother trying to chase it. Just stay the course, be steady, be consistent, and let the market do what it does in the long term, despite the little blips and little jumps. And the small volatility is nothing. We don't really care about that. So I'd like to hear your thoughts on it. But please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.